All right, let's get started here. Welcome to the Real P&L Trading Show, where I share my P&L on 4 accounts, and I also share my proprietary SafeWheel system for free. And I want to make sure that you guys ask any questions you might have before the end of the broadcast. Anything about options, anything about my trading systems, I'll answer your questions. And also, somebody maybe let me know that the audio is working okay, everything, the video is working okay. Just let me know in the chat. And let's get started here with one of my systems, one of my 4 systems, which is called the Earnings Edge. You can see that on my screen. This is the account for the Earnings Edge. You can see all the trades that I've made since the beginning of 2025. And this is actually my new system, 3.0. So it's my 3rd update. And you can see how my 3rd system's doing so far. I traded, what did I trade last week? I traded CrowdStrike and made $294. So a small profit there, but it came out a winner. Well, let's take a look at the P&L, or the actual net liquidation of the account. You can see it's not fluctuating or anything. I don't have any open positions. 10,019. I'm going to put that in the spreadsheet so we can kind of compare it, see what that looks like compared to the past and what's going on. So again, CrowdStrike, I made $294. Here you can see my 3.0 update. I've got 5 trades total, 4 wins, 1 loss. So I've got 80% win rate. My average win is 1172, average loss 516. And what did I say my account was? Let's see, 10,019. So you can see it's up here, 10,019. What's SPY trading? I know it was down on Friday. It's trading at 599.20. 599.2. You can see how the Earnings Edge is doing so far with the 3.0 update in 2025. I'm about 56% already this year, which is higher than normal for a normal trade system. Obviously, there's more risk with the Earnings Edge, and I compare it to the S&P. The S&P is up 2.34% this year. How long have we been going? Almost 2 months, maybe 7 weeks in, up 2.34%. So the market's up pretty good. And you can see how my system did the Earnings Edge in 2022, where I outperformed the market 63 to minus 19%. 2023 did 17%. The market was up 24%. In 2024, I was down 33% on the Earnings Edge, and the market was up 23%. And so far this year, I'm up 56%. The market's only up 2.34. Okay, so that is the Earnings Edge. By the way, the cart for the Earnings Edge is now open. I'm going to leave the cart open. So if you're interested, there's a link in the description, and you can get the course and trade the Earnings Edge on your own if you're interested in that. I used to have a wait list for that, but now you can go ahead and trade that and go ahead and get that product. All right, let's talk about the PL5 Pro. The Pro is where I put a majority of my liquid net worth. And let's see what account that is. Account 527 should be this account here. Yeah. And the net liquidation here is 482. 484. Let's see, 484,504. 484,504. 484,504. So I'm up. 484,504. All right, so I started trading the PL5 Pro. I kind of discovered there was a little weakness in the PL5 in certain up markets. And so I discovered the PL5 Pro, and I back tested and everything, and then I was able to finally apply it on July 19th, 2024. And since then, from July 19, 2024 to the end of the year 2024, I was up 15.99%. The market was up 6.65. So you can see that the PL5 Pro outperformed the market during that time period, and it has minimal drawdowns, 1/3 to 1/2, 1/3 the drawdowns of the S&P 500 based on back test and forward test. Now, in 2025, the PL5 Pro is up 3.41%, and the S&P is up 2.34%. So overall, since I started trading this about 8 months ago, I'm up 19.95%. The market's up 9.15%. The market is no slouch. The market's doing quite well over the last 8 months. It's better than normal, but twice as good as normal. But that is the PL5 Pro. So let's talk about the Premier Level 5. Just the Premier Level 5, right? Not the Pro version. The Premier Level 5. And in that, I'm trading that in ID. And I can kind of show you my account, but not the whole thing, so I show my account number. I couldn't figure out a way to hide my account number and show my net liquidation. So it's 34,070. 34,070. So it's down a little bit from last week, and that's because the market's down. So this one, the PL5 is closely tied. The way that I trade it is closely tied to the market. So the market, so the market goes up or down. It's tied to the market. Let's take a look at what I started this one on July 16, 2024. So again, similar mid-July until the end of the year. The PL5 versus the S&P 500 did 10.22%. The S&P 500 did 3.94 from that time frame. So the PL5, its total goal is to outperform the S&P 500. The PL5 Pro, the goal is to make money in all market environments. But the PL5 is just to outperform the S&P 500 is the goal. In 2025 so far, it is outperforming. It's up 3.04%, and the market's up 2.34%. Overall, the PL5 is up 13.57%, and the market is 6.38% up since July 16, 2024, when I started implementing this started with $30,000, and I put it in the account and started applying the PL5. So I'm up $1,000 this year, and I was up $3,000 last year on a $30,000 account. Okay, let's talk about the Safe Wheel. You can see my results for the Safe Wheel for 2022, 23, 24, and 2025 so far. Let's go ahead and take a look at what the Safe Wheel account is. The net liquidation is 5711. 5711. So let's put it in the spreadsheet first, get an idea of how it's doing, and then I'm going to trade it. 5711. So it's up from last week. You can see it's up 4.2% in 2025. So it's outperforming the market. It has about half the drawdowns of the market. So on a risk-adjusted basis, it's doing quite well this year in 2025. Overall, it's up 14.22%. And the market's up 26.16% since the beginning of 2022. So it's underperforming nominally, but on a risk-adjusted basis, it's pretty even with the market because I get about half the drawdowns of the S&P 500 with this system. So it's less volatile. And it struggled last year in 2024, but this year so far it's doing well. So I'm going to actually trade this. I buy a $5 call on Fridays. Other than spending $5 on Fridays, I've traded every single trade in this account in the Safe Wheel live. I don't think there's anybody else that's actually trades live, or if they do, I don't know if they traded every single trade in the account live since 2022, but you can see that I have. All right. So coming in, I know I was long shares last week. I had 100 shares, and I sold. It was a 26.50 call, and I got called away. So I made pretty good money on the stock. We can look at the. You can see that I'm up $282 on LI this year to date. I haven't traded any other underlying. So you can see, the profit and losses right here. This is kind of where the rubber meets the road when you see this kind of stuff in somebody's account. It's not just, the net lick obviously is more important, but here you can see everything that's been traded in the account. So the first question is, my hedges, I'm going to talk about my put hedge. There's 3 questions I asked. Number 1, do I own 200 shares? The answer is no. If I did, I would see if this hedge had paid off. Second question, is my days left in trade under 100 days, because then it depreciates too fast? The answer is no. Third question, is the put within 70% of the actual price of the underlying? So I need to do a calculation to make sure. Last week it was 77%. Let's see, so 20 divided by 26.41, that's the price of the stock right now. It is 75%, so I'm close enough. If it was under 70%, I would have to move this strike closer. Okay. All right, so now we're looking good here. We have our long call. The long call I spend $5 on just to protect this hedge. So it's like a hedge for the hedge. I have that on. I actually had to pay 12 cents for that on Friday. Looks like we had an earnings. LI did earnings this morning, so you couldn't find a call for $5 or less, so I had to spend $12 on it. That's fine. That was the cheapest one I could buy, way out there at the 35 strike. It's currently trading at what, $6 now. Okay, but my hedges look good. I don't own any shares, so I'm not looking to do a covered call. Now that my hedges look good, I'm just going to start the traditional wheel. What am I going to do? I'm going to sell a put, and I need to, according to the rules of the safe wheel, I want to do it out of the money, but I want to get at least 26 cents for it, or $26 for it. So let's take a look at what I can do. And as far as my sizing, because I have between $5,000 and $10,000, and I'm trading a stock between $20 and $40, I'm going to do one wheel strategy and 3 put hedges. So 1 contract. So I'm going to be looking at the puts, I'm going to look at out of the money, and I'm going to look at where I can get at least 26 cents. Right here I can get 29 to 33, 19 to 22. This one wouldn't work, the 24.5, not enough premium. This one has enough premium, but if I can remain out of the money, I always like to go 1 back, and I'm going to go with the 25.50. So I'm going to sell one of these. Right now the mid is 45, so I'm going to collect $45 if this sells for that, and it did. So filled order. So I just collected $45 more. I'll get to keep that premium no matter what happens, and I'm hedged. So if this stock goes down significantly, I have a hedge. And if it goes up, of course, I'm just going to keep the $45. So I'm at the 25.50 put, and that is where I'm going to maybe get assigned. I might get assigned at 25.50 if by the end of the week, because this is only 4 days, by the end of the week, if this stock goes under $25.50, I'll get assigned and own another 100 shares and start selling calls against it. Now, if I cannot sell calls against it, I have a plan. Unlike the other people that trade the wheel, they don't really, I mean, their plan is if the stock goes down to just do nothing, and their capital is not being allocated, and they're not getting a return on their capital. But with the safe wheel, you're always collecting, ABC, I'm always be collecting, right? So I'm always collecting premium. And that's really the edge to this system, is to always be collecting premium. That's what you want to do. The problem with the traditional wheel, I just put out a video on that last Thursday, is that you're not always collecting premium, so your capital is not being fully deployed. Okay, let's see if there's any questions or comments here. Kevin says, good morning from Florida. And I appreciate you said you can hear me. That helps me out. And Avery says, hit the like button. So one of the things that I do that's different is that I have 4 different accounts, and I trade 4 systems in each one of those accounts. So I'm not getting diluted by, okay, I'm trading this system, I'm trading 2 or 3 different systems in one account. I'm not doing that. Each account has its own system with black and white rules. And so it doesn't get confusing about my results. It doesn't get confusing about what's going on in the account. Plus, if you're trading a system that has many different underlyings with many different trade structures, traditional options trade structures, premium selling structures. And the market crashes, the market, all stocks become correlated and everything goes down in one direction. And those types of portfolios are extremely difficult to manage. I mean, you've got 20 different positions on, and you've got to look at each one individually and make a decision while the market is crashing. You're behind the 8 ball there. You're not going to get to it on time. Things are going crazy, and you just don't have time to deal with it. So, especially when you're lagging in and out of positions. So the point I'm making is, if you like the way that I'm doing this, that I'm actually sharing my P&L, and that I actually individualize my trading systems in each account, then do me a favor and hit the like button, because my goal is to revolutionize this industry, and I want other instructors to share their actual net liquidation. And they should do it on a consistent basis. And if you also believe that, hit the like button, because that helps get the word out. That helps more people come in and learn about what I'm doing. And it helps other people go out there and ask their instructors or potential instructors this question: do you believe that instructors should share their P&L, right? So you're not asking them directly if they should share their P&L, right? Because they'll have some excuse or whatever. Don't ask them directly, ask them indirectly. Do you believe that instructors should share their P&L? Not just them, but just in general, and see what they have to say. They almost always say yes in a roundabout way, but they don't really say yes for themselves. So whenever you see an instructor out there, any instructor on YouTube, please put in the comments, do you believe that instructors should share their P&L? Put that in there. See what they have to say. Let's see, Rich. Rich has a question here. Since the stock dropped, would you consider rolling the call hedge down closer to out the money for $6? Yeah, I would, it's a consideration. But you can see currently right now that I'm already at that level. Like, if I were to go in today and buy my put hedge, I would buy the $35 call, because it's around $5 to $6. So that's the one I would end up with anyways. So I wouldn't necessarily play around and roll it. I had to pay $12 for it, and that's just a rare circumstance. It happens every 3 months where when we go into earnings, I might have to overpay just a little bit for that long call. And it's $5, $6, extra, $7 extra, no big deal. But I wouldn't really roll it or whatever. I'm fine where I'm at with a $35 call right now. Let's see here. Any other questions? Okay, I don't see any other questions. So in parting, I'm going to go ahead and end the session here. And what I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys.